Let's begin today's event, sponsored by Endava and hosted by American Banker. I would like to introduce your moderator for today, and that is Mike Sisk. Mike, you have the floor.
Thank you very much, Adam, and I would like to welcome the audience once again. We are very grateful that you have chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with what I am confident is going to be 60 minutes of very interesting discussion today. Once again, our topic is 3 musts for successful banks: digital cloud and open banking. And my name is Mike Sisk. I will be your moderator today. I'm a contributing editor at American Banker, and my articles have also appeared in Barron's, Crain's New York Business, Inc., Institutional Investor, Strategy in Business, and Worth. And I am very, very pleased to introduce our 3 speakers today. Vikram Dewan is as the Chief Information Officer for Deutsche Bank's Corporate Bank Division. Vikram leads a 3,000-plus strong global team across more than 30 countries. Corporate Bank is comprised of 5 main business areas: cash management, security services, trade, finance and lending, trust and agency services, and commercial clients. CB Technology supports these businesses through CIO-aligned teams, as well as horizontals such as client connectivity, infrastructure, architecture, strategy, production, and risk and control. And since taking on this role in 2018, together with his senior leadership team, Vikram has developed a business-led technology strategy which accounts for the business model and product capabilities needed in the short, medium, and long term. A multi-year roadmap covers not only fixing the foundational technology, but also improving revenues in short to medium term, as well as initiatives to leapfrog the competition. And to achieve the ambitious roadmap, the CB technology team is becoming engineering-centric with significant hiring to ensure we have the necessary talent in-house. And we're really very, very pleased to have Vikram here with us today. And joining us here as well is Dan Cobley. Dan is an entrepreneur and investor in innovative tech startup businesses focusing on financial services. He leads the Fintech portfolio at Blenheim Chalcott, a long-established London venture builder, where he has co-founded a number of fast-growth Fintech companies, including Salary Finance, Kudu Mortgages, and ClearScore. He has been a non-executive at Admiral, the UK's largest auto insurer, and an advisor to Fintechs Onfido, Libris, Module, and Farewell. And until 2014, Dan spent over 8 years at Google as Managing Director, UK and Ireland, and as VP Marketing of EMEA. And prior to Google, Dan held senior marketing roles with Capital One, Frito-Lay, and Ask Jeeves, where he worked in London and the Bay Area. And we're really also extremely pleased to have Dan with us today. And rounding things out is Wynn Davies. Wynn is SVP US Finance Sector at Endava. Wynn has more than 20 years of experience in advisory and delivery for financial services firms. At Endava, he leads the North American financial services team and helps to lead the company's thinking for banking globally. He has worked with some of the world's leading banking groups on leveraging digital technology and future state operating models, and recently helped them with client interaction models, blockchain, and cloud. Outside of work, Wynn is kept busy by his wife, 2 young children, coaching rugby, and supporting his family's focus on alleviating food poverty. So we are really couldn't be more happy to have this panel here today. It's going to be a round robin discussion here today. I'll be throwing out a couple questions, and the gentlemen will be tackling them along the way for the next 45 minutes or so. And then after that, we've set aside a little bit of time, usually 10 or 15 minutes, for questions from the audience. You don't have to wait until the end to put that question into the queue. You can do that throughout the hour as it occurs to you, and we really encourage you to get those questions in as they do pop into your head, and we'll make every effort to get to the questions that you ask. If for some reason we don't get to a question that you've asked, we will definitely follow up after the program. So your voice will be heard. We very much want to hear from you, so please do ask away. And I think with that, I am going to, I think I'll get things started with our first question, gentlemen. So we know that a part of financial institutions being able to compete in today's markets means they need to accelerate their digital strategy. So where do you think banks should be on their digital journey today? And let me kind of throw that first to Wynn.
Hey, thanks, Mike. Thanks for having us. It's good to be here. So I think, that question is a good question. Where should they be in the digital journey? So they should be in the middle of that digital journey, and they should be going to their second or third iteration of that. banks should be looking to start that digital journey. So what's a digital journey? Well, that's best understood by understanding what a digital business is. So digital business is one that provides value to its customers and users. It gives them more than they put into it. So any effort that they do from a task needs to be frictionless and seamless. And what a digital business does is it enables this by using the vast amount of data and intelligence it has around customers, it has around market, and has around similar transactions to make that a seamless, frictionless process. So you don't want somebody to start a process and then have to go and find a piece of information to continue running that process. Any data that exists within the bank should be accessible through that process. They should be able to pull it and use it and give you a fully automated, frictionless experience. So what we do is we call this a user episode. So user episode is focused between a transaction or an interaction that a customer is having with a bank. And this episode might be opening an investment account. It may be paying somebody. It may be just looking at their balance. But every episode, is a separate episode. It takes all the data and is basically seamless. So you don't feel anything is an effort. And that means people keep coming back to you and they keep coming and having that experience. Now, I talked about retail banking, but this doesn't just stand for retail banking. It's for corporate banking, it's investment banking, it's commercial banking. It's about that seamless experience that makes people wanting to come back for more all the time, using the data and the understanding you have of them and the markets.
And Mike, can I just add something to that? I think
please do.
If the question is whether you think banks should be on their journey, I think they should be at the same pace on their journey as the consumers expect them to be. And those consumer expectations are driven by their experiences in other sectors, how they experience Amazon or Netflix or other high quality advanced digital providers. And when they're interacting with those organizations, they only have a single log-on for the multiple different offerings that are there. They have all of their history in one place. They have a seamless interface, whether it's through their tablet or their mobile or the website, or even through their Alexa or Google Home device. And so increasingly, the expectations of a digital experience are being set for people at a very high level in sectors outside of banking. And many people have been exposed to those much more in the last 18 months because they've been forced to by the lockdown situation. And so now they're saying, why doesn't my bank do this for me too? And so I think that's what's driving where they should be on their journey. And many banks have been left behind by other sectors.
I think Dan, I think that's a really good point, Dan. If I look at somebody who's on a digital journey and I think is doing very well, I'll look at Purple Money. So Purple Money is a bank that's focused in the US at the disabled members of our communities. And what they've done is they have understood the needs of that community incredibly well. So they've moved and they said, we've got a single line log on, we've got a single interface. But we also understand that for people who are receiving disability checks and are getting funding from the government, what they don't want to do is have an investment income which is such that it drives the fact that they won't be able to get those benefits anymore. So Purple's looked to create products that cater to that market. And for me, that's a digital bank. It's taken not just the process and making it seamless, but it's also understand who its customer base is. It's segmented, and it's given them seamless, frictionless experiences that allows them to meet their needs and understands what their needs are rather than what the bank's needs are. The bank's needs are selling products and getting deposits. And this is moving to what the customer's need is and enabling them. And I think the point that Dan made about that is having all your history and all your data in one place is one of the needs that you have.
Exactly.
Interesting.
And if I can add to the same, I think what's said here is completely spot on. The corporations are also wanting the same experience as consumers do. And more so, they would like their data to be also available and accessible in all stripes, the way they can utilize it in the best possible way, in real time as much as possible, and also not through traditional old and clunky messaging types, but more through APIs, more through analytics that can easily help them slice and dice the data. And from a bank perspective, they also need to utilize the same data to be able to understand the trends, understand the patterns of how the consumers or the corporates are using the banking services, and then develop better products for them. So I think like the way Wynn started the conversation about data being the bedrock for digitalization, is very, very true. And the way that Dan said that the consumers are asking for more and more, consumers and corporates both are asking for more and more. And if anything, the pandemic has raised the bar on us.
Let me ask you sort of a follow-up on that. Something that I've written about is the relationship between fintechs and banks and the whole kind of it makes, when you talk about where banks should be on their digital journey, it just kind of makes me think about that. In terms of what a lot of times it can be couched as a sort of adversarial relationship between fintechs and banks. But I think there's a lot more to be said in terms of the way they need to cooperate to get to really service the customer. So I was kind of curious what your thoughts are along those lines in that field.
Yeah, I don't mind kicking off on that one.
Sorry, go ahead, Dan.
Yeah. Dan, you go, please.
There's a great quote from Andreessen Horowitz, one of the big venture capital firms, which is the battle between every fintech startup and incumbent bank is whether the fintech gets distribution before the bank gets innovation. And I think that really summarizes some of the challenges there, that it's actually very difficult for fintechs to reach a significant market. They haven't got the brand, they haven't got the branch distribution, they often haven't got the trust. And it's very difficult for many big legacy organizations to really innovate. So I think there's a huge opportunity for that conundrum to be solved by the two sides coming together. And where I see a lot of the real traction and the real success for both sides is where the bank works very hard, or the broader financial institution works very hard to make their the interface into them something which works for fintechs, and where the fintechs don't see it as an adversarial relationship where they have to beat the bank or kill the bank, but to add value to the way the banks distribute products and services to their customers. And I definitely think the real opportunity for innovation at scale is where you have the fintech and the banks working together.
Yeah, and I would like to say that from a banking perspective, we've always viewed as fintech or big tech or tech fin in three different ways. Firstly, we look at them as customers. Because with the evolution that we've gone through in the last couple of decades, and look at the valuations of the tech firms, it's really, really hard to not think of that as a client segment that you don't really focus on. And that's very true for developed economies as well as emerging economies. The second way we look at tech is as partners. There's so many great things that tech has already done, which doesn't need to be repeated. So we should be partnering with them to reuse the assets that they've already developed and work to integrate them seamlessly with what banks have to offer in terms of services. And then the third is competition. So there is competition, and that competition is once again raising the bar on both sides, particularly on the banks, to make sure that on the digitalization or innovation journey that they are not left behind. So we think of the tech counterparts in these three distinct ways.
Yeah, I think Vikram, you hit it spot on. There isn't one box fits in where fintechs plays in our industry. And if you actually look at the amount of the number of acquisitions banks have made of fintech firms, they see it exactly the same way. Do we acquire someone because we want that innovation? Do we acquire someone and close it down, which some banks have done, because that's in competition with us? But they always take the tech that they've got from them and they use that to advance their own platforms, their own thoughts. So, I think your point, Vikram, is when there's good tech out, everybody's looking to leverage it. Bang on.
And then just to bring that an extension of that to life, an example from my world. So I work with ClearScore, which is very similar to Credit Karma in the UK. It's become the biggest distribution channel for credit cards and loans in the UK. And the banks that have engaged with that by making sure that their APIs are fully functional and fast and so on, to allow somebody to be pre-approved for a new loan product on the ClearScore platform, are getting fantastic volume of high quality customers. And so there's a real opportunity there being demonstrated to grow both sides by them working together.
Fantastic, fantastic. So I'm thinking about shifting. I wanted to ask something about cloud right now, but is there anything more on the digital topic that I don't want to cut anyone off? Is there anything else you wanted to add on this portion, or can I move along?
I think let's move on, because I think cloud and digital they're so interlinked.
Absolutely. So Vikram, let me ask you, based on your experience at Deutsche Bank and your wider experience in the industry, could you share with us how digital has empowered the cloud and your business as a whole? How's that played out?
Absolutely. So it's public information. Deutsche signed a very big deal with Google just last year, and we're on a journey to start migrating our platforms onto cloud and also build new ones using as many native services as possible. To me, cloud is a game changer. If anything, the banks are a little late to the party, but now we are in there and we want to lead the way as much as possible. It's a game changer, not from only an infrastructure perspective. And I don't want to discount the infrastructure elements that a cloud provider brings to the table. You get an immense amount of scalability, flexibility, resiliency, and so on, and the list continues. But to me, that is all an amazing benefit. But at the same time, the native services that the cloud providers have developed reduces the time to market for so much of the software that the banks need to develop. And in my view, this is a once in a generation opportunity to embrace the new ways of software development life cycles, which will reduce the need for having larger teams and longer times for developing software. At the same time, there is a lot of innovation that can take place between cloud providers and banks, developing new solutions which were not possible in the past. The IoT world is still very much new to the banks in terms of how to understand the data and develop new products on it, as an example. And the list goes on. So we are very excited to be partnering with Google. And the reason why we have picked Google over the other competition is not to just get the services they already have in play, but to innovate and develop products in a very strategic way together.
Excellent. Thank you. So Dan, what are some of the trends that you're watching and seeing with the cloud?
I think that pretty much every fintech is cloud native by design, and if the capabilities, the services, the innovation that the fintechs are offering are going to be made available in partnership with the banks, then that is so much easier if the bank's infrastructure and data is cloud-based. And so businesses I'm working with are working with multiple partners. If they're trying to work with a bank or financial institution that is still much more legacy-based, then it can take a year to get the partnership up and running. Whereas if the bank or FI is cloud-based, you can do it in 6 weeks. And so there's an extraordinary nimbleness advantage to the financial institutions in terms of them being able to leverage the entire innovation ecosystem that's out there if they've got their own house in order by being cloud first.
Yeah, I think Dan, at Endava we talk about a cloud mindset. Like building what you and Vikram said, a lot of banks, like, we're going to go to cloud to save money. Like that shouldn't be the driver. Yes, that'll be one of the outcomes. But what you're looking to do is you're moving to somewhere you're going to accelerate product development. Cloud gives you the ability to do that. When we say product development, we don't just mean the new development patterns, but the way of being able to take what exists in the market and bring it into your organization the way you talked about. You get to move to infrastructure as code. And, Vikram, you and I had a conversation about this, last week, where we talked about the fact that infrastructure is one of the biggest pain points within financial services, because the people with the skills, it's not sexy, it's not cool to be doing legacy infrastructure anymore. You don't get the right people there. So you get outages, you get issues all the time. Cloud gives you the ability to, infrastructure as code. It's a lovely saying, but it's true. You can automate that. You can controls, you can put automation on that. And then as you start to control things, you then be able to get a better cost model. So we've all talked about, you've got stuff in data center, I'm going to move things from the data center and I'm going to put them into cloud. It's going to save me money. The reality is when you move to true sec DevOps, agile, way of working, DevOps way of working, you then have the ability to spin up environments as you need them. You have the ability to take down environments as you need them. That saves you money. It gives you environments that previously it could have taken you a month to provision. It gives you the ability to have burst capacity. So as you suddenly need to do a huge amount of processing, like in March and April last year, when our markets in capital markets have been absolutely crazy and everybody needed to process risk and everybody needed to move externally. One, I needed the gateway so I could access my systems, but then two, I needed the infrastructure where I could host everything I had. Cloud as code, or infrastructure as code and infrastructure in the cloud allowed banks to do that. And the people who were furthest down the journey got to the next point. And then the final thing, because I'm doing a little bit of a rant here, I'm talking about a lot of things, but the final thing is you get data gravity. We talked about digital is leveraging data. Cloud gives me the ability to manage, analyze, and bring in a lot more data than I had before, because I'm not having to make the investment in these huge data centers to be able to do that. I can use the cloud as and when needed. And that allows me to get the insights and analytics, allows me to have a differentiated experience and drives that digital experience for my clients.
And just a last point to add on there, I think a lot of organizations 5 years ago would have understood those advantages, but worried about the resilience and the data security that might come from a cloud provider. But I think in the last 5 years, that's massively changed, and the resilience and the data security that you get through one of the top 3 cloud providers is above what pretty much any bank can provide on their own. And it was actually quite interesting seeing the UK regulator, the Bank of England, say a couple of years ago, having previously been very reticent to support cloud migration of customer data systems. They said that banks should embrace cloud technologies which have matured to the point that they meet the expectations of regulators and financial services. And so I think that was quite a watershed moment, certainly in the UK, and I would imagine regulators around the world are coming to a similar view.
And I think that's an amazing point, because without that, there was always going to be an hesitation to move very, very private data onto cloud. But I think having cleared that hurdle and developing the right compliance policies around the utilization of such services, it opens the gate for so many new things. So we are truly excited to be on the cloud journey as a bank.
Yeah. And I think Vikram, you talked about GCP. So last week, BMO came out and said, hey, we're going with AWS. Every week you hear about one of the large financial services institutions has chosen their cloud provider or multiple cloud providers and making that statement about it. And one of the things I love about the Canadian banks is they have been incredibly successful because they've been conservative. And please don't hate me for saying this, our friends in Canada, but the conservatism of both the regulatory environment and the culture there has meant that they have been incredibly successful. And if you look at RBC, it's one of the biggest banks in the world. When you see the Canadian banks going to cloud with large statements in the way they've said this, it's kind of like, hurry up, everybody, and get on that train, because the train is out of the station now. If you're not there, you're not in the game. I think I think the head of digital KeyBank made a quote that digital is what's empowering us and the cloud is empowering digital for us. And I think that's, if you go to speak to anybody who's in this journey, they're going to say the same thing.
I'm always really interested in sort of best practices that are out there. Is there, when we talk about moving from digital to the cloud with, expeditiously, are there any other examples or who's doing it best out there that you might be able to share? I mean, I don't know if we can name names, but it's always nice to hear some sort of more examples for our audience. Dan, does anybody come to mind?
I mean, most of my exposure is in the fintech world, where they have absolutely started from that place and they've got no legacy systems to replace. So I'm probably not the best place to answer that. Maybe Wynn's got more perspective.
So I would say you want to look at Asia. You want to look at the banks coming out of Singapore. They have embraced cloud with this speed and veracity that no one else has. And they've taken it on, and it's allowing them to leapfrog both the offerings that they bring to market and their cost base. So their cost base is going down as they're leapfrogging and they're taking things forward. And I think, their regulators have worked fantastically hand in hand to drive that. We have a different regulatory regime here in North America, and especially in the US. And I wouldn't want to talk about the regulatory environment in Singapore against the US. It's completely different. But the guidance that the regulators have given out there, move to cloud, adopt digital technologies, be in the emerging tech in a big way, has helped drive that. And I think you look at the Singaporean-based organizations, the ones based out of Hong Kong, not necessarily Japan. Japan is getting there, but it's not in the same place as some of the other regions. Thailand, it's fantastic what they've been doing there. And then the analytical and machine learning applications that they have in those regions, which we are beginning to see and are beginning to come to us as well, is great. Vikram, you may have a different view sitting where you're sitting, but no, I'd say that.
I think there are, firstly, from your perspective on Asia, I would certainly agree. They were the first ones to embrace, and they've gone through it quite smoothly. It's not an easy journey. Like, I don't want to mislead anyone. While it's such an important one and such an essential one, it's not an easy journey. To Dan's point, banks do carry an immense amount of legacy of their own, and there is no one hammer for every nail. You gotta spend the time. You gotta go through the non-trivial exercises of understanding how your systems interact with each other, how data flows through the systems, what is the right sequencing for migrations, and so on. But it's a very rewarding one at the end. It does require the right thinking, the right planning, the right design of the design and architecture for your own organization, and then you can go as fast as some of the other places have gone. But it does require some good thinking in the beginning.
Yeah, a lot of people are like, let's just lift and shift to the cloud, and we can do that. That doesn't work. You've got to look fundamentally at what works well in the cloud. Do I need to move remote sites? How do I componentize my architecture? If I move some things to the cloud and other things not, how am I going to communicate and how I'm going to link things together? There's a lot of questions. And so, what we always saying to people is, if you're moving to the cloud, architect it properly. Don't do lift and shift. Don't look for a single thing, but architect what you want the future of your organization and the capabilities you want to have in your organization. That's key. It's not about hitting one piece. It's taking that whole cloud mindset and saying, how does cloud work holistically? How does it empower me? And therefore, how do I want to architect myself to be going forward?
Mm-hmm.
I would truly underscore that. Just a lift and shift alone is going to give only, I'm making it up, but a third of the benefits. So thinking, that's where the right thinking comes into play, and exactly what you want on the other side of the whole program of work is very important to understand the capabilities and then build towards it. A lift and shift might be a very attractive economical option in the beginning, but in the long run, it will actually be the more expensive one, because one will lose the opportunity of re-architecting, rethinking, and leapfrogging on several fronts.
Yeah, I think like it may be cheaper initially, Vikram, but as people start to go and they start to use some of the capabilities, like the ability to spin up environments, but they don't build the capability to spin down that environment. Because it's not just the technical processes, it's not just the technology, it's the processes around managing that technology is just as important. The ability to spin up environments, do testing, and a huge environment of testing is amazing. You leave it up there, it costs a lot of money, but with cloud, you can take that down. So, it's about rehosting, replatforming, and refactoring what you have, and not necessarily in that order. Yes, I could just rehost, move to the cloud. Do I replatform? Do I just go to somebody else's solution? Or do I refactor what I have at the moment? And it's a combination of those three which is going to give them benefits. It's not about reinforcing and perpetuating the existing paradigms and practices that you have. It's about moving to the new ones that you should do. And every dollar that you spend at this point is going to give you multiples in return. So thinking about it is the right way to do it. And yes, sometimes you need to do it. Sometimes there's an imperative just to same cost and to move away from a CapEx to an OpEx number straight away. But do that with the understanding that you're going to have to invest the money in the future. Interesting.
And so, Wynn, I know you talked about this a little bit before, but just before we move on to the next topic, it's when it comes to the ecosystem, the environment, what do banks need to think about? Or is there anything else we want to say about what banks need to be thinking about when approaching or reviewing the cloud journey that you're discussing?
I think we thought about them. Really understand what your cost model is. Think about that rehost, replatform, refactor. Think about, do you want to be cloud neutral? Do you want to have the ability to go to different cloud platforms? A lot harder than it sounds. Everybody's built and architected in specific ways for you to do that. Think about the data gravity, where you want your data to be, how you want to be leveraging that data going forward. Infrastructure as code, I hit that earlier. I think that's key. Think about, it's not just moving things to the cloud, but it's enabling your infrastructure through the cloud and changing where your infrastructure sits. And then it's also about changing your testing viewpoint. Like, you're now moving to fully automated testing, the ability to spin up environments and test things that you didn't have the money, the time, or the budget to do before. And then you move to observability, and this is the conversation Vikram and I had last week, which is the ability to sit there and go, I can now see what's happening inside the cloud in the way I couldn't see in my data centers. I can have jobs, I can have alerts telling me what's happening. And the cloud is architected for this. From day one, they've built this so you can understand and see what's happening within your infrastructure, which you couldn't see in the data center. We've evolved, we've begun to build that. It's still not as easy in a physical data center as it is in the cloud. So put all those things together, and then you're going to get the benefit. And I'm sorry, Mike, that wasn't a quick answer, but the reality, this isn't a quick fix. This is Vikram called it a generational change, an opportunity for the banks. And I believe in that. I really do believe that.
Yeah. Excellent. Very helpful. All right, so then let's move on, because on top of all that we've been talking about is open banking, which is in response to regulatory environments that are seeking more transparent, cheaper, easier banking. We all know that the U.S. has not regulated it yet, but more firms are seeing open banking as kind of a must in order to offer new services to clients and to remain relevant. So I guess I wanted to start. It is obviously being mandated in Europe, so maybe we can start with that. And Dan, maybe you could share a little bit about the lessons that banks in the U.S. could take from sort of what's going on there, and what your observations are.
Sure. So this all started in early 2018 when the European Union came up with their Payment Services Directive 2, which essentially said that a customer's financial transaction data belongs to them. It doesn't belong to the bank. And therefore, with their permission, they have to make it available to any other parties that want to use that data. And they set about a bunch of protocols to make that possible in a safe and secure way. And that took a little bit of time to get some steam going, but now I think it's very well embedded. There in the UK are about 3 million users of open banking services. There's 300 or so organizations that are live with open banking services. And there are about 10 billion open banking data calls per annum as a run rate at the end of last year. So it's getting some real traction. And it's enabling some really valuable additional services for banks and fintechs to be able to offer to their consumers. So as an example of the big banks, Barclays is probably one of the most advanced in the UK in their use of open banking. You can now log into your Barclays app and through that interface, look at your balances and transaction histories of any of the other banks that you might bank with, because that information is being pulled through open banking protocols into your Barclays app. And you can even go as far as to initiate a payment from your Santander account to a merchant from your Barclays app. And you can see in that example that whichever bank has the best user experience offering the greatest functionality is likely to own the interface hub where the customer spends their financial time. And therefore, that's going to be the place where they discover new products and services that they want to consume, which puts the owner of that service in a very strong position versus the others. So that's kind of one example. And another example is there's a fintech lender called Zopa in the UK, which historically has underwritten their loans using the traditional credit scoring methods that most lenders use. Recently, they also started looking at transaction history available through open banking, and they found that 37% of those people who they would have rejected purely looking at credit score data, they were able to accept. So you think about the economic efficiencies of being able to convert such a higher percentage of your applicant volume, given you've already invested all the marketing acquisition costs by then, that has huge implications for them. And the early suggestions are that the credit quality of those customers is every bit as good as those that they would have got through traditional underwriting. So you can see from a couple of angles how open banking can have real positive impact for the consumers that are being accepted for loans or not having the hassle of logging into multiple apps, and for the institutions that are providing those services.
So Dan, you talked a little bit about Europe, and if we go to North America, and I've had this question a few times, especially in the US, is do you see open banking as being important here? And my answer is yes. And do I see the adoption? Yes, not as quickly as we'd like to see it here, but yes, we're totally seeing it, because the reality is that customers own their data. If you look at the California Consumer Data Protection Act, it's very close to GDPR in Europe, which means consumers now own their data. The regional banks and even the tier one banks are sitting there going, I need to have more data to be able to do my jobs. I need to have this data at my fingertips. And a huge number of the fintechs that are working with these banks are very focused on that open architecture. And I think we're talking open banking, but it's actually open finance. Open banking is now across insurance, it's across wealth management, it's across everything. The ability to own your data and use your data in the way you want to do it. And, we can talk a little bit more about this, but we can't forget that the fundamental underlier for open banking is the API architecture. An ability to have that architecture, that API architecture, which allows people to present and consume data in a standardized way. And the successful firms are going to be the ones not only who define and build the right API architectures by the standards, but also maintain the data and maintain the access to that data in a way that is consumable and usable. I think the Dutch Central Bank did a piece of work a year and a half ago where they talked about the number of banks which had actually created the APIs and provided access to the data, but then had actually stopped maintaining the data. So, you weren't actually able to use it for anything. They weren't maintaining those APIs either. So they met the spirit of the regulation. Sorry, they met the law, the letter of the regulation, but not the spirit of the regulation. And I think there's a huge opportunity in the US because it's not a regulated imperative. It's a business imperative that we go to the next level within open finance and API architecture, and people are vested in keeping this real.
I think you're completely right about that, absolutely. And I would admit that without the pressure of the regulation in Europe, particularly in the UK, we wouldn't have got to where we are today. But now we're there. It's kind of the snowball has got its own momentum now, and any US or global bank that wants to serve customers in Europe is going to have to build and maintain these APIs because it's going to be a regulatory requirement, and they're going to start to see the benefits that come from them. So another interesting data point in one bank I was looking at, roughly 1% of the pay slips or the salary checks that they process for mortgage applications, if they are PDF or paper-based, have been doctored. They're fraudulent. And so if you can get that from a golden source through an open banking interface into seeing somebody's salary transaction, you've got a massively reduced fraud risk in your and processing risk in your mortgage processing department. And so banks are going to see opportunities to improve the quality and the cost of their processes, and are going to be pushing towards having better API interfaces with all of the other sources of financial data. And so I think it's inevitable that markets, whether they are forced by regulation or not, will go down this journey.
I think that's very true, that the regulation sometimes becomes the driver for change, and sometimes the business needs will become the driver of change. And I think in this particular case, we're going to see all of it together, wherever it's applicable. But I want to underscore the points already made, which is data and APIs. The real success for open banking is going to be relying on getting these two elements right, which is how do you bring the data together, make the most sense out of it, have it readily available, and then have it easily accessible in a rich fashion like APIs. So these two are super, super, super important to get done right when it comes to providing newer digital services to our consumers in the future.
Vikram, is there any more you can tell us sort of about open banking at Deutsche Bank? Like what's kind of gone on there, how that process is rolled out?
We've utilized, obviously, we have, to Wynn's point, we have complied with the letter of the law and also with the spirit of the law in terms of ensuring that we are PSD2 compliant and obviously European markets. Deutsche, being the biggest clearer for euros across the world, has a tremendous amount of volume that goes through its own platforms, but now through PSD2 is able to access, with the right approvals from customers, their data to even bring better solutions for them. Like one of the products that Deutsche delivered in the last couple of years was push payments. Also on making it very easily for customers to be able to make payments right from their debit accounts, independent of whether they hold them at Deutsche or elsewhere, with the right access and authorization, and sometimes cut down the cost of making transactions. So that's just one example. And there's several other examples which would not be possible if PSD2 would not have required the data to be opened up wherever customers want that data to be consolidated. It's impossible to offer in-house banking or other liquidity solutions if that data is not available in one form or the other. So I'm just giving you a couple more examples here, but the banks are building on it. They're truly building on it, and getting into a position where they can predict the needs of customers through utilizing that data, as opposed to having a reactive call and then dealing with when the clients make the ping to the banks. And there is also a new concept. It's not a new concept, but banks are embracing a lot more, which is contextual banking, which is with this data, they're able to recognize the context in which their clients are living and breathing through their businesses, and requiring new services or products which they would not be able to offer if they didn't have access to that data for customers. Again, I would like to say, repeat the point that Dan made. The data is not owned by the banks. The data is owned by the clients. But to make sure that we can partner with the customers in using their data in the most effective way in order to serve them is all really possible now through the regulations, through consolidation of data, and through APIs.
Interesting. Yeah, thank you, Vikram. All right. Good. We've got about 15 minutes to the top of the hour. I think this is maybe a good time to take a few questions from the audience. So if anybody has got something on their mind, now would definitely be the time to get that question into the queue. But I do see some good questions here already. So let me just let me jump right in, and I'm just going to throw these, gentlemen, I'm just going to throw out the question and just please feel free to chime in. So how important and where in the journey to cloud do you see a legacy code conversion?
Vikram, do you want to take this one, or shall I pick this one up?
So it's a very interesting question. So you do and you don't. So it really depends on what you understand to be legacy and what is it running on, and is there a future for that particular component or the system in your new architecture. So to a large extent, if you had limited legacy and you had the opportunity to write an application from scratch again, where you could use native services and reduce the amount of code you need to write on your own, that's always your preferred method. But the question is still very valid, that there will be cases where you will be doing conversion, and the conversion of code, you don't necessarily have to convert everything. You could, again, it's a case-by-case scenario in terms of looking at what truly needs to be converted, what language was it written in the first place, how easy is it to run on a cloud environment to start with, or maybe just throw the whole thing out and write it using native services. It's going to be very much a case-by-case kind of assessment. And that's exactly what we have done at Deutsche Bank in terms of preparing for our cloud journey, is not taking one answer, not taking just lift and shift answers, not taking just build from scratch answers, but sometimes there are hybrid solutions that you need to deploy to make the most sense out of it.
And just a little thing to add to that is there's obviously all of the points that Vikram made, but you've got to think about the relationship between talent and code choices. So the best engineering talent want to work with modern, interesting tools and techniques and so on. And so if you try to hire top people to work on very dated systems and code and architecture, then it won't be an attractive role for them, and it can be difficult to get the talent that you want.
Excellent. All right. Next question here. Is there a standard for the security of the APIs between organizations?
Why don't we kick that one over to Dan for Europe, and then I'll talk about North America.
Yeah. Yeah, so for Europe, absolutely. There's the open banking implementation executive is the body which is funded by a levy on the banks to put all of those rules and processes in place. So there is an absolute standard of, with security massively built into it. And if you don't comply with those standards, then you do not get the keys to access any of the open banking data.
So in North America, in the US, because it's not regulated in the US, we have a slightly different regime. So there's a couple of different bodies who are bringing, in a consortium way, bringing this to the industry. Endava, we're part of the Financial Data Exchange. We believe they are driving most of what's happening in this part and most of the API architecture within the industry at the moment. If you look at it, it's a big group. A lot of the banks, a lot of the fintechs are in there, publish standards of what around the best things on APIs are. It's key. It really is key. I know the question's asked because you understand it's key, but I'm just going to reiterate it. If we don't have standard APIs and we don't have the ability to consume, it's going to be very expensive for us going forward as an industry. And what we're trying to do in the same way as we want frictionless experiences for our end users, we want frictionless experiences between the banks, because that reduces operational risk and costs for us. So Financial Data Exchange.
Thank you. Thank you. All right. Next question here. How does a bank choose from all of the various fintech options? And can they choose banking as a service without open banking?
Okay. So that's sort of a peel the onion type question in all honesty. So how does a bank choose from all the various fintech options? So there's a couple of ways of doing it. So when we say all the various different fintech options, let's be very clear that all of the firms who have been existent and are still very strong firms, like Fiserv, like FIS, that's a fintech. Then we have the emerging fintechs like Amount, who's a spin out of Avant. We have, sorry, I'm blanking. There's so many. It's difficult to reel down.
One of the questions is from Thought Machine. So you've got organizations like that.
Thought Machine, yeah. I was trying to remember Thought Machine as well. So one of the things is, basically the key question back to yourselves is, what are we trying to do and where are we trying to go as a financial institution, as a bank? That should drive which fintechs meet your needs, because not every fintech is going to meet everybody's needs. The second piece is, what is the core platform that you have? What is your core banking platform? Because there is the ability to interact and to work with multiple different platforms. It changes based on the experience that they've had with each other. So if you know what your core platform is, it's a question that says who works and who interacts with them. So is there a blueprint that says, yes, this is what a digital bank looks like? Yes. And does most firms like Endava have one? Yes. Is it as good as Endava's? No, but there is a blueprint out there. But it comes down to what you already have and what you're trying to do, which is the right journey for you. And then the second question is, can you choose banking as a service without open banking? Yes, because they're two different things. So banking as a service is the provision of software and services to a financial institution. So it is not open banking. It can leverage open banking. And I think that's a important differentiation. Open banking and banking as a service are not the same things. Vikram, push back on me if you disagree with that one.
No, that's fair. And I think going back to how you answered the first question, but I would just want to second what you said in terms of integration. So they are the benefit that the fintechs have at times is they go in their evolution. They start with solving one problem and they try to solve it really well, and without having a legacy to manage, they're able to go much faster at developing solutions and being able to deliver it to whoever wants to buy it. But the difficulty that banks often face is they may like something which is state of the art, but it may not work really well in their own environment because of integration challenges. Like no system in a bank is a dead end system. Every system is talking to some other system to be able to do its job. And it's the integration element, and that's where cloud is a huge benefit. Being on the cloud itself for a bank allows them to integrate really well with fintechs who are more or less, as Dan said, mostly developed in a native way using a given cloud provider or even multi-cloud providers, but that integration challenge becomes much easier. And as far as the second question is concerned, I think it's very right to say there are two different but interconnected and reliant kind of themes, which is open banking and banking as a service. So I don't have to challenge you on this one. It's a fair statement that you made there.
And if I can just add one little thing to the first question, you shouldn't necessarily think about a single fintech to partner with for everything. Yes, there'll be a choice about a core banking platform partner, but then you may have a very different fintech partner for your identity verification and KYC, and another one for your payment services, and another one for whatever other peripheral services for your foreign exchange transactions or whatever. And so often the best solutions are created by having a smorgasbord of great innovation partners for different parts of your customer offering.
And being the broken record, having the right API architecture, those fintechs can integrate and work with each other. And that's the frictionless world that we want to get to drive down costs and drive up service for our end clients.
Yeah, that's what makes it all possible.
Perfect. All right, I think we've got time for one more question from the audience. And how about this one? How do you solve the cultural problems of banks aside from just the technical side? Most banks can't or do not want to solve the people side.
So super important question again. I think where we are today, and we're reading a lot about labor shortages across the world. And when you start to look at that, the talent that you require for whether it's a bank or a fintech or a tech firm or anyone else in any other industry that's relying on tech. The talent element is one of the most important elements, at least that's going to face this industry for the next few years. And I only say next few years, but it could be forever, but let's just say for the next few years. And finding the right talent, giving them the right environments, which is another part of your question, which is having the right culture, and allowing them to be free in their thinking and thrive and make changes is an important element. We are in a very difficult place when it comes to talent. It's an unsaid war on talent all across the world. And it's not about just onshore, offshore. It's not about high cost, low cost. In my mind, every location that you generally operate within, there is a war on talent. So the firms need to develop the right environments to be able to attract talent, have the right culture, which talented people do want ability to think and express themselves freely, and also work in the manner that they need to in terms of being flexible and so on. All of that is necessary to operate in the future. And the firms that do not embrace that will, in my personal view, will be running a very short in competition in terms of other firms leading, because they'll be able to attract the talents.
So I agree totally on the talent question. I think the other big issue is the issue of incentives. So as Wynn said earlier, this is not a quick fix solution. It's a multi-year project, multiple years of investment to get those returns. And if your organizational structure rewards people for what's happening next quarter or even next year, then people will inevitably take the short-term myopic decisions that don't lead to the right kind of thoughtful, long-term, properly architected digital transformation. And so that has to come right down from the top with a proper 5 to 10 year strategy with incentives aligned to the outcome of that strategy.
Excellent. Excellent. Thank you all. When were you going to say something there?
No, I've got nothing to add. That was summed up very well by that.
Well, we've just got 2 or 3 minutes to top the hour, but before I let you guys go and let the audience go, I wanted to just kind of throw out, if you've got, kind of a last thought that you guys would like to share, maybe the number one thing that the CIO or the C-suite should be thinking about to enable sort of all that we've been discussing today. Anybody want to offer a few last few words?
Everything that a bank should be doing is focused on adding value to the end client. Define who the end client is, and then align your digital experience empowered by cloud and open banking to drive that. And that's where it is. It's not about what's the right thing for the bank anymore. What's the right thing for the bank is what is the right thing for the client. And the regulatory environment that we act under, and the competitive environment we have, and the digital environment that has been accelerated by the current pandemic, as Dan referenced earlier, and the fact that people own their data, like Vikram says, means it's about that end client in a way, and means that it hasn't been for the last 50 years. And us as financial service professionals and people focused on banking need to get that right.
Yeah, my parting words here.
You go.
My parting words, and I'll make it real quick so that Dan can fit his words as well, would be a bit about the last question that was asked. I think attracting talents and developing the right culture based on respect, accountability, expertise, is going to be a key differentiator for this industry to succeed. Give hugs and be nice to people is something which is very old school, but I think it still works. All right, and as we are preparing to come back to work in many ways, I think offering the right level of flexibility will be super important at the same time. That's where I'm going to leave it.
And I'll just add one last thing, which is all of financial services is basically a data business. We don't make anything physical. We don't move anything physical. It's a data business. And so you will succeed if you have the right data organized correctly, accessible correctly, manipulable in a clever way, and you can analyze and interpret and interrogate it to add value to your end customer. So I would say that all of what we talked about is essentially about smart ways to make data work for you so that you can work better for your customers.
Excellent. I think that is a perfect note to wrap up our discussion on here. I want to, well, first of all, thank you, Vikram, Dan, and Wynn all. It's been a great hour of discussion. We've covered a lot of ground on some very important topics, and wanted to also thank the audience for being here, asking those great questions, and we would not want to do it without you. So very much appreciate your participation here today. And we will be sending you a follow-up email in the next day or two that will have a link to a recording of this event, so you'll be able to kind of revisit the conversation. And that is, I think, worth doing. There's some great content here, so dig into that at your leisure and in the future. And I think with that, I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.
Thanks very much.